the biggest thing that I've learned in American Express and which still stays with me is you can never be successful if you don't keep your customers ahead of you. You can never be successful if you feel that you can fool your customers. You can never be successful. Customers comes first.
How are the early days when you're building something of your own?
So I must tell you the biggest learning, the biggest learning for anyone who would be listening to this is I learned the concept of humility. When I started this organization, I was in my head, I was a chief risk officer, global chief risk officer. And the humility part of it comes in that even after you feel that you're building something which is going to probably change the world, which you believe is solving a problem, but on the other side of it, people don't appreciate. My advice to everyone is whenever you are starting off, right, don't try to hire a chief risk officer, right? Don't try to hire somebody who is super ingrained into, because it doesn't make sense. You do not know, it doesn't make sense to invest that much of money or equity. But have somebody who is an advisor, right? And use that particular person to help have that conversation with you and give the confidence.
Folks, welcome back to yet another episode on the Product Folks Founders Playbook podcast. Today, we're thrilled to welcome Kaustav Das, the founder and CEO of Efficient Capital Labs. With a background in finance and technology, Kaustav has been instrumental in providing innovative capital solutions for SaaS businesses, and with over 2 decades of experience in the US financial services sector, heading risk for Amex Commercial Lending, has been a chief risk officer at Cabbage and Petal. He launched Efficient Capital Labs in 2022. Under his leadership, the company has provided non-dilutive capital financing to numerous businesses, helping them scale efficiently. Kaustav's unique insights into the intersection of technology, finance, and business growth have positioned him as a thought leader in the fintech landscape. Kaustav, welcome to the show.
Thank you, Suhas, for having me.
Awesome. Kaustav, I know there's going to be a banger of a conversation over the next 60 minutes. I'd love to start from the early days. You've started Efficient Capital Lab in 2022, but, you've had over 2 decades on the Wall Street, and with 14, almost 14 to 15 years at Amex. Where did the inspiration to start Efficient Capital Labs come from?
I mean, the inspiration started back in American Express. Like everything, I would say that what I'm today, whatever I've learned, I owe it back to my American Express days with wonderful mentors that have been there, that have guided my journey, that have advised me and chalked the path for me. In American Express, I was one of the first few employees to start the fintech division in American Express back in 2011. Right after the 2008 and 9 crisis, I was tapped to become one of the first 3 employees. So that is where I was exposed to the world of entrepreneurship, right? We were a small unit amongst a big giant organization. It was merchant financing, which is what we call in a different way, what we call merchant cash advance. But it was in American Express, what we did was we selected a group of 10 people in different organizations, and we said, hey, this is the new product that you have to launch. This is the amount of money that you have. Go ahead and figure it out. And there I was exposed to the world of entrepreneurship. And slowly and steadily from 2011 till the time I left American Express, it grew to be a multi-billion-dollar organization. From the 10-member organization, I saw it grow to 600-member organization. And that gave me a lot of insights and kick. It was something that I never experienced, in which you're making decisions, you are responsible for the decision. And that is what prompted me to take one of the biggest moves of my career of joining Cabbage as a chief risk officer, reporting directly to Rob Promine. Again, a great personality from whom also I learned a lot. That is there, Catherine, who's a co-founder, again, a great person. Both of these individuals were instrumental in building the first fintech, or one of the fintechs that has that propelled the world of small business lending into a much bigger arena. And there I was a chief risk officer, in which I did not have anyone, I was not reporting to anyone. Every decision that I was taking, I was responsible for it. And that is how my journey started. That seed was planted in my head of how I can build something of my own from scratch. Been in multiple organizations, but my exposure to revenue-based financing started with my first conversation with Miguel, who is a CEO of Capchase. And back in 2020, he had reached out to me along with his founders. They were building something exciting, and he wanted to brainstorm when it came to risk. Spoke with him. The seed was planted that, hey, this is a super interesting idea. Then saw them grow from 2020 to 2022. They were on a phenomenal growth path. They're still on a phenomenal growth path. They're an inspiration for us. And in 2021, Miguel had reached out and he wanted insights when it came to revenue-based financing in India, right? And we started talking about it, and he said that, hey, Kaustav, if you're ever thinking about something, we would love to see, how we can partner together or, in different ways and form. So I said, it's now or never. I actually packed my bags, went to India, spent a couple of months. And that is when I realized that the opportunity was massive. The opportunity was massive not because of the fact that software in India was riding a high. It was growing 6, 7, 8, 10x. Even till now, it is growing. The availability of capital had dramatically changed, right? A lot of VCs were pumping in a lot of money out there. But what I realized is the cost of capital, what we call the cost of borrowing or alternative capital, was a lot more expensive than what I was exposed to sitting out in US, and it's still expensive. And when I spoke to 36 of these software companies, I realized that each and every one of them either already have most of their revenue coming out of the US, and they already have a US entity. So when I asked them a simple question that if I give you the same funding that you're raising out here, not on the VC side, but on the debt side of it, and if I can make it a lot cheaper, all that you have to do is transfer it to India, and I can make it a lot cheaper. Why would you not take it? And the answer was, of course, we would. And that is how this idea germinated of efficient capital, of bridging the cost of capital gap across geographies. Why should a founder in India who's catering to all of the US, why should a founder in Singapore who's catering to all of North America be stuck with a lot more expensive pricing when there is a cost of capital that's available to them right across the ocean? And that is a journey. We want to make cost of capital accessible across the globe, whether it's South Asia, Southeast Asia, Middle East, but also along with the access, we also want to make it affordable, like that we have it in North America.
That is a very interesting point, Costa. Just for the benefit of our listeners, when you mention making the cost of capital a lot more affordable, can you double click on that? Can you help us understand that with
Yeah,
a
yeah. So cost of
layman?
capital is cost of borrowing. What that means is today when you borrow, like it's the structure is the same. When you borrow from a bank, a commercial bank, like in the for listeners in the US, if you're borrowing from a Bank of America, a JP Morgan Chase, the cost of capital is the least, or the cost of borrowing is the least. Very similarly, in India, if you're borrowing from an HDFCs or ICICIs of the world, then the cost of borrowing is the least. The commercial banks, so they can afford to give you the. Then you go to the second tranche, right, which is what we call a venture debt, right? A venture debt has nuances that are there. A venture debt mostly follows once you've raised a venture capital. Venture debt um, usually would give to a venture-backed company, not a bootstrap company. Venture debt is not non-dilutive, but still, in terms of expenses, it is more expensive than borrowing from a commercial bank, but it is lower than borrowing from either NBFCs or in India or borrowing from alternative capital. Now, the third one is alternative capital that is there, which could be in various forms. It could be an installment loan, it could be a credit line, it could be a merchant cash advance, it could be any one of it, but it's not provided by one and two. It's provided by private players that are there, right? Like as an example, Cabbage was a private player. Like you've got On Deck that was a private player, which is a public company. Very similarly, in India, you've got NBFCs and private players, whether it is like a Velocity or a club with a K or a Recur Club, even though some of them don't have it on their balance sheet. Those are the more expensive ones. The reason they're the more expensive ones is because they need to borrow from another institute and they need to make money by the spread. However, what they do is they make it more accessible to you. They make it easier for you to apply. They make it less onerous for you, but there is a cost associated with it. That is the cost of borrowing that I'm alluding to when you borrow from an alternative source or what we call fintechs that does lending. That's what I'm alluding to.
Very interesting. No, thanks for sharing that, Kaustav. Um, Very interesting journey to getting started with ECL. Um, because of working with a very large bank company on the financial services side, then getting into the startup side, and then starting your own company. Very different worlds, right? How are the early days like? Were there any initial challenges that you remember which gave you an awakening, saying that, okay, hey, this is a very different world? And how are the early days when you're building something of your own?
So I must tell you the biggest learning, the biggest learning for anyone who would be listening to this is I learned the concept of humility, right? It is one of the biggest lessons learned of being humble and the humility part of it. When I started this organization, I was in my head, I was a chief risk officer, a global chief risk officer, in which when you're presenting to the board or when you're presenting to investors or when you're presenting to the CEO, people are listening to you. People are paying attention. People are not questioning as much because you're backed it by data. But when you start something of your own, all of those things are almost wiped clean. You're starting from zero. Right? There are experiences that I have in which when I was raising funds, people ask me, what is the definition of a loss rate? Right? And for me, okay, fine. Like it's going back like 20 years in which I'm defining what a loss rate is. And the humility part of it comes in that even after you feel that you're building something which is going to probably change the world, which you believe is solving a problem, but on the other side of it, people don't appreciate. And as for any other startup, when you're presenting to a VC, 90%, 95, 99% of the time when you hear a no, for reasons sometimes unknown, for reasons sometimes which does not jive with you, and that is when you say that you're starting from scratch. And that was the number one lesson that I learned when I started is humility.
Very interesting. Also on another podcast, I think, just doubling on the humility point, you also mentioned the fundraising experience is always a chicken and egg problem. Um, you've, I think, gone about raising both equity and I'm sure debt as well for since you're doing a lot of lending. How is that experience, and any tips for our members who are in the process? I know market's a lot
For
harder. Any
sure, for
tips for
sure.
them?
So I will say that in this particular aspect, I was slightly lucky. I mean, lucky. I'm choosing my word, but because of my experience, I was in the risk domain for 20 years, of which a good seven, eight of them I was in the fintech domain. So I interacted with a lot of the debt facility providers that are there. And what it did was it exposed me to all of these people, and they saw me in action. They saw me, how I run an organization, how I run a risk organization, how much I'm on top of it. And very unlike when a fintech that does lending, I actually got, I don't want to sound pompous, but like I actually got more term sheets on the debt side than on the equity side. So people on the debt side were a lot more open working with me because, again, as I said, there was a level of confidence that was there, having worked with me in person for the past 7 years. For me, the challenge was equity, not the debt. So it
True.
was an easier. So you're right, it's a chicken and egg conversation because when you go to an equity player, they would say that, hey, even if I give you $2 million or $4 million, you need to help me that there is a visibility that you're going to get a debt player. If they don't come in, all my money is going to go into waste. So in my case, I went in the reverse direction. I first had a debt facility term sheet with which I could go back to my the equity people that I'm speaking with and say, I've solved one big problem for you, right?
Mm,
So now coming to, again, I know that not everyone would be in a situation that I was. So my advice to everyone is whenever you are starting off, right, don't try to hire a chief risk officer, right? Don't try to hire somebody who is super ingrained into, because it doesn't make sense. You do not know, it doesn't make sense to invest that much of money or equity. But have somebody who is an advisor, right? And use that particular person to help have that conversation with you and give the confidence. What is it the debt facility people are looking at? The debt facility providers are looking for confidence. They're looking for experience. They're looking for people who appreciate risk and is not growth. So when you put somebody in front of the debt facility providers who can talk their language, where they gain the confidence that, this person knows the product, is thinking through not just on the credit side, but also on the fraud side and also on the regulatory side. That is what gives them confidence. So get to that one person who will be able to talk the language of the debt facility providers and start off small, right? You don't need $100 million debt facility. Start off with a $5 million promissory note, $10 million promissory note. That is more than enough to take you to version two. And as soon as you get that, your conversation with the equity providers becomes a lot easier. So that's what, if I did not have a risk background, that is what I would advise me sitting in front of a mirror saying that this is what you should do, Kaustav, if you did not have the risk background. That's one. The second thing that you can do, where the number of players in this particular bracket is a lot lower, there are few players that have emerged in the market that actually do both equity and debt, especially in the US. I do not know as much in India, but in the US side, there are players that do both equity and debt. Now, those players are interesting because they understand the nuances and they will give you both. Yes, there might be a premium attached to the equity that you're getting, but at the stage that you are, it's okay. It's okay giving that premium to that. So there are unique players that have come out, like Upper 90s, one example that I can see that have done an excellent job in which playing in both equity and on the debt side of it.
Very interesting. I think thanks for keeping it so tactical. I think that felt like a pretty interesting insight from cracking the debt side first and then going ahead and tackling the equity side. And also I think the point on the advisory side that you mentioned, I think that's definitely something a lot of people can go ahead regardless of what domain they come in. I think that's a great way to tackle this problem statement. um Also, going a little deeper on the ECL journey side, there are quite a few non-dilutive financing options in the market today. Um, can you elaborate a little bit on the USP that you all bring in? I think particularly you mentioned, I think it was cross-border focus. If you can go a little deeper into
100%.
that.
Before I go to the cross-border part of it, which is of course like one of the most unique and one of our biggest USPs, I also want to touch upon, especially on the India side of it. Most of the RBF players that you would encounter, without getting into the names of it,
Sure.
they don't have it on their own balance sheet, right? In the US, we have it on our own balance sheet, and that's a big differentiator. Now, why I would say this is a big differentiator is if you don't have it on your balance sheet, you are at the mercy of the people in your marketplace to buy that paper. So if I'm a SaaS company, as an example, and I want revenue-based financing, you might do
Hmm.
the risk assessment and you might find it to be lower risk, but you need somebody else to agree with you it's lower risk and agree with the line and agree with the pricing that is there. And that takes a lot of time. We have it on our own balance sheet. I don't need approval from deal by deal basis from anyone. I have got the contours in which I work with my debt facility, and if I'm within those contours, so I'm a lot more quicker, I'm a lot more nimble that is there, as opposed to not having it on the balance sheet. There are pros and cons. The second part of it, which is what you brought up first, which is probably the biggest differentiator, is we're the only RBF that actually give a global company the merit of being global, right? So if you have revenues coming from multi geographies, we underwrite you with multi geographies that are there. If you have got debt in terms of risk assessment, we are conservative enough to look at the debt in terms of multi geography, and that is what has been the biggest differentiator in the market. The second thing is we're the only RBF company, especially in South Asia and US, that can actually fund you in two geographies, right? India and US. The captures, as an example, can also do in multi-geography, but we are the only one that can do in US and India. So, for example, if I'm approving somebody in India as an example and say that, hey, you're approved for $200,000, they can choose to take 150 in US and 50 in India. That's a very unique proposition which no one has today. We are looking to expand that in different countries. So yeah, treating a global company globally is our unique proposition.
Got it. Because that's very interesting. Is there a particular reason you think other RBF companies couldn't do this in the past, maybe, or did you see more signs of companies here registering? Like a lot of SaaS companies I know registered LLC Corp, and that's becoming more of a trend. Which is why something like you offering this facility of raising debt on both sides of the border has become a lot more popular. Do you see that as a I just want to understand what was where did the moat here come, and why did this become more of a need for founders?
So the moat is India going global, right? So the
Ah,
need, rather, more than the moat, the need is India going global. So when you talk to any SaaS company that are there, whether they are $100,000 ARR company or a $10 million ARR company, the ultimate goal is coming to North America. Not being facetious, sitting out of New York or sitting out of the United States. I don't want it. I don't want to sound it that way. But this is U.S. is North America is the holy grail when it comes to eventually coming from North America. And the growth, the significant and stupendous growth that has happened in India, people is moving from east to west. What they want to do is, while they've either been successful in India, they now want to come to the US, or they're building something directly for the US itself. So India going global is the need that transpired us to be able to fulfill that. Right now, India is no longer a local company. Everything is not being built locally. Everything is being built globally and being consumed globally. That is what we are solving for in terms of need.
fair point. I think I 100% agree with you. I think North America is the software buying capital of the world, right? There is no, it's probably the biggest buyer in the world, and I think that's why you're seeing SaaS really pick up. And I think we're seeing a similar trend in like consumer as well. A lot of Indian brands now want to start selling to diaspora or just start selling exports as a vertical is really picking up. So completely agree with you. What's one other point that you mentioned? I think that I'd love to double down on is the risk management and underwriting. For a product like yours, I think that becomes super key. Can you help our listeners understand a little more in depth? I know it's 20 years of learning that I'm asking you to condense
Not at
in
all,
less
not
than
at
a
all.
minute.
Like we'll be more than happy to, like, we 20 years is not enough. That's all they can say in risk. Like, we learn every day. I get amazed every day. People are doing such amazing jobs that are there. So what I tell the team and what I tell people is, the reason we have been very successful, without getting into too much of numbers, you'll see some of the announcements coming out in the next 4 to 6 weeks. Without getting too much of numbers, we've had an like inspirational loss rate in the past 2.5 years that is there. It is not because of the fact that we have a stellar risk team. It's not only because of the fact that we have got some amazing AI ML models that are there. It is because of the fact that when we look at risk, we look at risk globally, right? Unlike organizations that are there when they look at risk locally. So that has been one of the biggest differentiator, if you may. And second of all, we are risk first, or profitable growth first. We just don't chase growth for the sake of growth. We are we keep the eyes on the ball, and profitable growth is a number one objective function that we try to optimize for. Even when we started off back in 2022, May 2022, when we gave the first financing, that is there, it was profitable growth, and right now when we are in August 2024, it's profitable growth. So it's not that it has changed over time. It is not that, oh, because of the regulatory environment or because of loss rates or because of competition. This is what we have been. This is what I've been groomed to be, and there are pros and cons to it, right? I always tell my investors that you will see absolutely stunning growth, but you would never see a growth in which we come back and say that we're getting crippled because of losses.
Yeah, no, no, that's true. Are there particular segments or sectors that you believe RBF works really well for, or is that something that you are focused that here these are the sectors that we want to start with and then maybe expand to the
That's
others?
right. So we are very focused, I would say almost entirely focused on software companies, right? We want to ride the wave where South Asia is right now. It's not just India, but like you'll see a lot of these picking up in countries like Philippines and Indonesia. Of course, Singapore is there. Middle East is another humming area, which is really growing. So it is software that we are very much focused on. But if you ask me as a risk person, I feel that even e-commerce is another excellent place where RBF works. We are not in e-commerce. We don't intend to be in e-commerce. Sitting right now, I do not know whether things are going to change in the next 6 to 12 months now. But if you ask me right now, we don't intend to be in e-commerce. We are completely a software RBF company. I do see e-commerce to be a great player, a great vertical that is there. There are other verticals that the jury is still out. I would say we do not know, but for people to test it. There are definitely other verticals. There are certain verticals that I would not get into, even though there would be what is a concept of recurring revenue. Like, for example, I don't understand crypto, right? So
Correct.
no offense by people who do, I don't understand crypto. So for me, I would be not just hesitant, I would not get into something like a crypto, even though there is a component of reckoning revenue that is there. Like crypto mining is a component of reckoning revenue. So things like those, I would not get into.
Got it. Got it. No, but I guess like the software market is so huge that there's enough and more work to be done just in that sector
For certain,
before
as I said,
it
like this is
touches on.
riding the wave. Software market is huge enough, and it's growing, and you're riding that wave in which it is growing right now.
True, true. Costa, before we jump a little into, given you have so much experience, would love to learn a little bit more about the opportunities in the fintech sector and some general challenges that we see on the regulatory side. Just before we jump into that, one thing I'd love to understand is if there was someone else who's starting an RBF today, right? When we spoke about boats, is there something that you feel you've already done in the last 2 years that has already helped you get that head start over someone else? I want to understand more from a product lens. Yes, risk, yes, underwriting, and a stellar team. That is for sure. But if someone else is starting an RBF, what is the real moat for ECL that you think is going to be hard for them to catch up to?
Depends upon which side of the pond you are looking at, right? If you are looking at from the US side of it or on this side of the Atlantic,
Yeah.
the moat is you need to consciously invest in time, effort, money, and people. This is something that is not transportable. Whatever we have built cross-border is not transportable. Whatever works in the
Yeah.
US doesn't work in India. Whatever works in US doesn't work in Singapore, doesn't work in the Middle East. So you need to invest the time, effort, money to do that. When it comes to the other side of the Atlantic, which is India or Singapore, especially India, that along with the same thing that I mentioned before, you need to invest the time and effort, but there's also a regulatory burden attached to it, right?
Right.
So to be able to raise funds in US, are you a US based company or India based company? How do you move funds into India? There is a lot of regulatory challenges that are there. If you're planning to do that, again, nothing is insurmountable. You can figure it out, but that uphill task would need to be there. We are starting from US, so it was a lot easier for us. But if somebody is starting from India and trying to go from this side, as in like raise funds at the US side of it, and trying to do it, there are a lot of other regulatory challenges in terms of movement of money, in terms of how the organization is set up, how the money between the two, whether it's a parent subsidy relation, all of these things would need to be taken care of.
Got it. Okay. That is a very interesting point. Kaustav, given you've seen the fintech landscape change over the years, we've spoken a lot about revenue-based financing. But if not for solving this one challenge, in the next 5 years, are there some other opportunities that you are really, really excited about? Say you weren't doing ECL, are there two, three other ideas that you were probably tinkering with, which you think might be great in the next decade?
Yeah, so it goes with the same theme, right? So the theme is boundaries and borders are dissipating. Like boundaries and
Nice.
borders are slowly going away that are there. So what that means is whether it's human capital, whether it is actual capital, is becoming boundaryless, is becoming borderless, right? Whether it is remittances of funds, whether it is movement of people, whether it is payments. So everything that has to do with cross border is what I would be doing. Maybe not today, maybe tomorrow. That is what efficient capital stands for, with its cross border. That is what I would have started off if it was not for funding. Like anything that, whether it's remittances, whether it's payments, whether it is invoice payments, anything that is cross border is the most interesting and exciting thing that is there. I mean, I'm sure you can do a lot of reading up, especially when it comes to remittances, movements of money, ledgers not being the same as before. So that is the next biggest thing in my mind.
Got it. Reminds me of another founder actually I met. He's an Indian who's also based in New York for almost a decade, who's also building cross border from about a very, very different lens, right? It's a company called Dula. What they do is help people
Arjun.
incorporate companies.
Arjun.
Arjun, yeah.
Yeah.
And when you mentioned, okay, hey, cross border is such a big problem, and this is the first
That's
thing that came to
exactly
my
right.
mind.
Like there is Arjun from Dula, there is Mark from First Base, there is Darby from
Uh-huh.
Clerky, right? We work very closely with all of these people, and they're solving, you're exactly right, a cross-border problem in which they can sit in US, and or you can sit in India and you can incorporate a company like miles and thousands of miles apart just by clicking certain buttons that are there. That is exactly what I'm talking about, how it has become borderless. Similarly, for opening up a bank account, right? When you think about a Mercury, when you think about a Blue Vine, when you think about their other bank Brex that are there, in which how you can open up a bank account sitting out of India. Of course, there are regulatory aspects to it which they're taking care of, but slowly and steadily you're being able to do some of these things which was unheard of like 6 8. It is becoming borderless.
Yeah. Yeah, I think that theme is very interesting. Imagine at some point, I know you all don't come in very, very early, but I'm guessing at some point of time, that entire full stack could be very interesting, right? Like, hey, sitting in India, I could start like you mentioned, right? There are options to start a company, banking, and then,
Hey man, you're
um,
stealing
you
my
know,
thunder. You're giving ideas now. Like tomorrow, like a lot of people will come up with this. Come on, I'm just kidding.
No, no, but it's an
I'm just
interesting
joking.
space. These are very. It's not something that I think existed even a decade ago in the fashion, or how simplified it's getting, right? To just start some of these, has it just takes away the burden of figuring these out, and
That's
the founder
exactly
can
correct.
then just
That's exactly correct. That's a
focus
very good
on
example.
their
The one
work.
that you gave about First Base and Dula and Clerky, a very good example how it's becoming borderless.
Yeah, well, that's interesting. I think cost of no fintech conversation can get away without discussing just the general landscape on the regulatory side. And I know we've seen a couple of challenges in the US banking space in the recent past, with I think regulators stepping in, and also there's also prevailing sense that the Federal Reserve may start to increase rates again, right? Is this something that you think about a lot? I know it is, but would love to understand what are some unique insights, and does this really change a lot of things for you?
I mean, I'll talk about the. I don't think, I really don't
Okay.
think, and I really hope not. I don't think we're going to have a rate increase, right? And
Okay,
if you,
interesting.
whenever you get a chance, you should look at the market. It's a bloodbath today, right? So
Okay. Okay.
Dow and Nasdaq is a bloodbath today, especially
Yeah.
the jobs report has come out. So I don't think the regulators are going to do
Increase.
any more rate increase anymore. If
Got it.
anything, there's probably going to be more than one rate decrease. So it's been up and down. We first thought there could be three rate decreases this year. Then it came down to the inflation was still very stubborn. So they said they're going to be only one. But I strongly believe right now, especially in the past 3 months, with all the inflation cooling down and the job market's really suffering, I think it's going to
Yeah.
be more than one. Um, I believe, again, this is me, I believe there are going to be at least two rate reductions. I absolutely don't think there's going to be any more rate increase. It's going to be a
Okay.
disaster. So yes, so that is in terms of rate increase and rate decrease, and rate decrease has got a lot of ramifications that are there. It helps companies like us. It helps people to borrow more. It helps the rates to go down across the board, right? Even when you are
True.
getting a laptop to a house to a car to do anything, everything becomes a lot easier. So what that means, spending goes up. When spending goes up, it's a circular economy that happens. So yes, so rates are going to potentially and probably and realistically go down in the next 5 months that are there. And very adjacent topic you said in terms of regulatory framework. Yes, the regulators are becoming lot more prudent and cognizant about the fintech aspect of it. There are two parts of one is in the fintech there is a banking, lot of verticals, like one banking aspect of it. Regulators have become a lot more observant, and they are scrutinizing a lot more that they have done before in terms of how you're opening bank accounts, whether the right due diligence are being done or not. Mercury, as an example, is doing a lot to make sure that they enhance that. I'm sure you must have seen very
Yeah.
recently they shut down all Ukraine banks, right?
Correct. Correct.
Ukraine founders, they did that, right? And there's no right or wrong. I don't want to get into right or wrong. I'm sure they did it for their right reasons, and I'm sure there are aspects of it why it's wrong, but it is all dictated by the fact that the regulatory scrutiny is going up, as a result of which all fintechs, including us, are having to take certain measures to be able to do that. Very similarly, on the lending side of it, they are really not. I'm not going to get into consumer side of it, which is another issue, but on the commercial side of it, they're really scrutinizing MCAs, which is merchant cash advance. Historically, merchant cash advance have gotten away with predatory rates, like starting
Hmm.
from 20% to 150%, right?
Wow. Okay.
They've gotten away with it. And now the regulators are really, really cracking down in terms of what they can, what they cannot, what are the disclosures, are they really squeezing it or not? So you will see a lot more people being cognizant about how much APR you're going to charge. Is it an APR? Is it a fixed fee? The disclosures of those, is it an APR or not? The disclosures are becoming so, and I think these are all for the better. This is all for the consumers. This is all for the people that we work with. And Suhas, one of the things that you mentioned was, I'm tying two things together. One of the things that you mentioned is, what did I learn from American Express in 15 years that I was there? One
Yeah.
of the biggest thing that I've learned in American Express and which still stays with me is, you can never be successful if you don't keep your customers ahead of you. You can never be successful if you feel that you can fool your customers. You can never be successful. Customers comes first. They are smarter than what you think, and they dictate your destiny, right? If you don't accept that, if you don't embrace that, you would never be an American Express. You'd never be successful, right? So that is one thing that we try to embrace and we try to live with. That customers come first. We try to build relationships. We try to make sure that we're as transparent as we can. We don't believe in gotchas. It might help. It might give us potentially some boost in our margin, but it doesn't help us in the long run. So customer first is the one mantra that I live by.
Very interesting. I think, yeah, definitely a great point to take away from the Amex journey. I think they've excelled it, and you know, I think given you worked there for so long, it probably comes on a default mode for you while you're building ECL. So that's a great point. Because of the last section that we're jumping into, I know we've discussed a lot about company building, a lot about fintech, but we'd love to get to know you a little bit on the personal side. So a couple of questions and then a quick rapid fire for you. Um, I think when I interacted with you in SF a couple of months back, and then just the interactions we've had on email. One thing I went back and told my teammates is just how fast you are with your responses. So the first question I have for you is a little bit about just work ethic, and then I'll talk a little bit about work-life balance with you. But the speed at which you respond is something that is commendable. I think it's something that we've read online saying that okay, hey, great founders are great are very fast at unblocking, or at least you know how do you manage? I know you're on the East Coast, you travel a lot, but how are you just on top of things at that pace?
One thing which I do not know whether it's good or bad or not, like, and you should speak with my co-founder. I haven't spoken about Manish, by the way, but like, one of the 1 minute before I answer that question, I would want to say that super grateful to have a co-founder, right? Everything that we have built right now is never built by one person. It's built by an entire army of people. It's built by a village, right? So, along with having an amazing team, I have an amazing co-founder who shoulders a lot of it, who listens to all my rant that is there. So I just want to make it a point to make sure that I recognize Manish for he's based out of Bangalore as a stupendous founder, amazing person, and how he has helped shepherd this particular organization. And a huge part of the success is owed to him. So now coming to that, so why I brought up Manish is that what Manish says is Kaustav doesn't sleep. So it's good or bad, right? You would see me responding at 2:30. The way I've grown up is I don't like sleeping. I usually feel that like sleeping is a waste of time. I don't know what I was doing to my body in a joking way, but um, I do try to get to my responses. And another thing which I very strongly live by is I don't believe in analysis paralysis. You can speak to the team. I don't believe it. We make a decision and we move on and we live with the consequences. We learn if there's a mistake. But I think analysis paralysis slows people down. You can very easily get in an analysis paralysis mode that is there. But there are also some downsides to it, Suhas, in terms of these quick responses. Sometimes you set unknowingly you set expectations in the team, right? If Kaustav is responding at 2 o'clock in the morning, does that mean that I'm working as well? Do I need to respond at 2 o'clock in the morning too? Or is the expectation? I try to tell the team, and sometimes it doesn't work. So I try to emphasize that, hey, just because I'm doing it doesn't mean that I expect the same from you. Yes, I expect that there has to be some amount of urgency, but the urgency doesn't mean that you need to respond to it or you need to sit in front of your screen and do an analysis. So sometimes you need, as a leader, you also need to be aware that what is the culture and trend that you're setting, right? People are looking up to you just because you're doing it. People think that that is the expectation. So you need to be very careful in terms of setting that expectation. You absolutely analysis and paralysis. I want people to embrace that. I don't want any one of my people to get stuck in an analysis paralysis mode. You make a decision and you move on, and we live with the consequences. So yeah, these are some of the things that I would say that I try to live by. I always put team first, right? I know it's very easy to say that for any leader, but I try to live by that. I always try to put team first in terms of anything that is there, and I owe it to the team.
Very interesting. Do you think somewhere this stems from your days on the Wall Street? Because I remember on Twitter in just the last week, there have been so many. I think it started with a founder posting a screenshot of the number of hours he had worked at Goldman. I think that was what I don't remember it clearly, but I guess that was maybe 80 or 90 hours a week. And then a lot of other VCs and founders. And the theme was that, hey, working at a startup feels a lot easier just because they've spent so much time. Like those workers were intentionally or non-intentionally very long, very intensive. I think especially consulting and banking, from what I remember. So, do you think you're getting some of that work ethic here? Does the startup life feel a little easier compared to the banking
Not,
days?
no, I don't think so. I would go back to the days that I was fortunate enough to work for organizations, and all four of them, American Express, Cabbage, Petal, and even QuadPay. None of these organizations had, especially like American Express, like none of these people, the work-life balance, as I said, was number.
Okay.
If I have to talk about it, like after customers, it was employees, right? You learn
Right.
so much from looking at leaders that are there. Ash Gupta, like he is the guru if when it comes to risk. Like he always used to keep after customers, employees first. The expectation was never that are there times in which you need to burn the midnight oil? Absolutely, 100%, right?
Right.
Do you have to do it day in and day out, week in and week out? Absolutely not, right? And that is what makes you a good leader. That when I'll give you an important thing
Uh,
that for people, I always tell people what is important and what is urgent. You should not mix the two. Something that is important might not be urgent, and something that is urgent might not be important. So when you tell people the difference between important and urgent, and if this is important and urgent, that needs to be done. Whether it's 2 hours or 24 hours, that needs to be done. I will make it a point to tell my team that this is important but not urgent. Means that I don't want you to stay back tonight to try to figure this out, but get it done to me because this is important for me. So
sure.
this is one learning that I've got from American Express, differentiating between important and urgent and the mixture of the two.
Oh, that is awesome. Well, I think that's a great way to look at it. That's another one that I had for you was in ecosystems. I know you spend most of your professional life, I think, in New York, but I think you grew up in India before that. And now I know the team is cross border as well, like you mentioned. Your co-founder, your a large part of your team is also here in India. Are there any interesting insights? I know the startup ecosystem has also picked up in New York, very thriving ecosystem there. Bangalore, I'd say, is probably the Silicon Valley of India, right? So, any interesting insights across the border, stuff that you like
Yeah, so I
about
mean,
it?
one very interesting insight that is very specific to my domain, so I do not know if it's going to be
Mhm.
relevant or not, but I'll still talk about it. A very interesting insights when I started getting into this journey when it's cross-border and I got exposed to the India side of lending financing is the mindset of debt versus equity, right? In India, there is a stigma of debt, right? When
Mhm.
when people raise equity, everyone makes a big deal about it. It's a big deal. Everyone makes a big deal about it. It's all over LinkedIn. Every founder is posting it. Every investor is posting it. Every employee is posting it. But when they take a debt, right, whether it's a venture debt, it might help them probably even more because they're giving up an arm, a leg to raise a venture capital. But when they raise a debt, right, there is a level of stigma that they feel that, oh, I've not done something that is good. It is like a blot or a black mark. And that is one thing that has been a very interesting learning for me. It is changing. It is absolutely changing for the better. In US, it is not like that, right? In US,
Uh-huh.
people embrace debt. Debt is a tool of a capital raise, right? Like the way
Right.
venture capital is a tool, debt is a tool, right? And that is where I believe I learned, and I'm still learning, that how to address that first. So when I speak to a founder, how do I address that first to bring them out of that mindset that it's okay to take debt. It's okay. It's absolutely fine to take debt. Like we have $100 million debt facility. We would not have been successful. We would not have been there if we did not have the debt facility that is there. So that is one of the important things I would say that in terms of mindset from especially from founders that we've been trying to get over that hump.
Very interesting. I think great point that you mentioned on the stigma there, right? Um, Also, last section, but a very quick rapid fire for you. Whatever comes to the top of your
Sure.
mind, very short answers. I'll shoot them right over. We have a couple of questions for you. I'll start off with this one. If you could host a dinner party with any five people from history or fiction or people that you would love to meet, who would you invite and why?
Oh, interesting. Well, I mean, first and foremost, I do not know whether it's going to be people or not. Like the first one I'm going to invite is my first pet dog that I had called Bachi. Right. So
Oh, wow.
he was a golden retriever. That's the first pet that we had. We lost him like now it's been 6 years back that we lost him. I would give anything to spend a day with him, and especially if it's dinner. He used to love eating. When you're talking about, I would also want one of my cousin brother. Right. Unfortunately, we lost him. Now it's been almost 19 years back that we lost him in a road accident. I know you said history. That's still the second person that I would give up anything to break bread with him. All right, he was my brother. And the other two people that I can think of would be Saurav Ganguly.
Oh,
Right,
nice.
I
Okay.
take a lot of inspiration from him in terms of leadership. I've seen him changing the cricket world in my definition. Again, not an argument, a definition of how to approach a game, how a mindset is important in a cricket game, not just the skill set of it. There is a lot to learn. And very similarly, another person in history would be, again, another Bong would be Netaji, like Subhash Chandra Bose that is there. I
Very.
believe that, again, historically, he did not get credit for what he did for the country. Like a very, very brave person who led it. A lot to learn from him if we ever read books. So, yeah, so those will be the four people. And of course, the fifth person is going to be me. Those are the people that I can think of. People or humans that I can, living beings that I can think of.
Yeah, not the list that I would have thought of, but I think you were going right back to the roots, right? I think bringing the Calcutta back
I know,
again for
I
you.
know. The Bong and me took
um,
over.
okay, I'll switch tracks. Kaustav, if you could invent a gadget to make everyday life easier, what do you think that would be?
There's so many of them. Starting from making my bed, but like if I really have to choose, I would say that living in New York, I would say teleportation, man. Right,
Yeah,
like
the
going
traffic.
from one place to the other, like instead of being stuck in traffic or traveling so much, like teleportation would be that one gadget which I'm hoping someone is thinking somewhere and hearing my plea that please, if it could be expedited, that would be great. Yeah, teleportation, going from one place to
Yeah,
the other.
yeah. Hopefully, the flying cars finally come, right? I know we've been promised flying cars for a while now,
Let's hope that we
but
get it
hoping.
in my generation.
Yeah, that's true. Because if you had unlimited resources to solve one major global problem using fintech, where do you think that would be?
Global problem? No, I mean fintech comes like way later, man. Like I mean, I would honestly say that if it is a global problem, I would say that war. I mean, hunger. Like I mean, if that is what is meant, right? Like it really breaks my heart when I see like kids that are there in different sides of it, that are being subjected without taking any country's name that is there, subjected to this thing, like what they're growing up with. And what they're growing up with is creating a person that is going to become a contributor to this thing later, right? What is the impact that we're having? So fintech does not even feature if I do that. Like there is so much of animosity between countries that are there. There's so much of hatred. There's so much of love lost between countries that are there, and we are never being able to get out of it. We get out of one, we get pulled in the other. We get out of one, we get pulled in the other. So yeah, so war would be the first thing that if I ever could solve for, I would probably step into that and try to solve for it.
No, so true. I think in 2024, at least, I think we should definitely get beyond some of these. Because of last one for you, I think you're very eloquent. Do you have a communication tip for the rest of us?
Oh, okay, that is a left field question. No, I honestly, no, I do not know.
Again, going back to work ethic, I think I probably mentioned that earlier again, but I feel really respect the fact the way you've been able to manage things, at least in the limited communication that we've had. Do you have a productivity tip for the rest of us?
The one thing that I do believe in is like whatever you want to do right now, like that email that you want to write, you should write. Like I don't believe in creating a notepad in which to dos for the remainder of the day that is there. If you have the time and if it's on top of your mind, just do that, right? So as much as I can, I try to use my time. Like when I walk my dog, we have another golden retriever right now, and everything that is a to do, I'm writing it. So people get emails and texts from me saying, like randomly, people will get things which probably doesn't make sense. Like, why is Costa thinking about this? But if it is in my mind, I do it right then, right there, assuming that I do have time to do so. I don't
Right.
believe in keeping it for the later. Like I am keeping a tracker of my to do list. I don't believe in that.
Can get past without us talking a little bit about AI. So the last one for you, as a founder, as a CEO, is there any apart from GPT? Maybe I think like that's pretty prevalent. But is there any other tool or any other aspect of AI that is probably something you use on a day to day basis?
So like the way I said, and I'll be very candid, like the way I said that when it comes to crypto, right? My knowledge is extremely limited. Like very similarly for AI, my knowledge is very limited. So I would not venture into saying something, especially when people are going to listen to it. They may or may not follow, but people are going to listen to it. I would not venture into. I'm not an AI expert. I do know
Got it.
a lot of statistics. That's what my background is. But when it comes to an AI, I don't consider myself an expert
Got
to
it.
even give an opinion on.
Got it. Maybe on the next one, but would love to sometime jam with you on the evolution of fintech. Right, I think you've
Sure.
seen a lot, but hopefully we'll keep that for part two. But Kostav, this was a fantastic conversation. I know we went a little over time, but I really learned a lot. Thank you so much for spending time with us
As
today,
I really
and really
appreciate
excited.
you giving me this opportunity, right? This particular forum and this platform, and happy to do this. The questions were very relevant. Thank you again.
100%, Kostav. You have an amazing day. We'll definitely see you around.
Thank you.